Stocks just had their best first quarter in 5 years. Here's where strategists think the market is headed. Stocks ripped higher in the first 3 months of the year amid investor bets that the U.S. economy remains on solid footing. Now, the key debate on Wall Street entering the second quarter is whether the S&P 500, GSP, has any more room to run after its best start to a year since 2019. The market rally has broadened over the past few months, moving from a story of a few stocks driving the major averages higher to investors piling into sectors sensitive to economic shifts like materials, XLB, and industrials, XLI. The prevailing bet is that the U.S. economy will continue to grow as inflation falls closer to the Fed's 2% goal, a so-called soft landing scenario. But some think after 5 straight positive months for the S&P, the market could be due for a pullback. You've had this strong move in anticipation of, let's call it a Goldilocks or soft landing environment, said Citi U.S. equity strategist Scott Cronert. And so we think we have to expect a digestive period here to digest these gains and allow some time for the fundamentals to grow into the price action. Cronert holds a 5,100 call on the S&P 500 and hasn't shifted that forecast higher as his team waits for more confirmation that economic growth remains resilient and earnings will come in better than currently priced into the market. The equity strategy team at Goldman Sachs sits in a similar position, maintaining a 5,200 year-end target for the S&P 500. But given stocks surge past their current target, the team recently explored 4 other scenarios for the benchmark in a research note. The 2 downside cases explore similar topics to those often referenced by the persistent bears on the street. One is where the market's expectations for earnings in large-cap tech are too optimistic, and that brings down the whole market. The other is that the Federal Reserve's battle against inflation leads to a higher-for-longer interest rate strategy that eventually stunts economic growth and spawns recession. Both negative scenarios would lead to the S&P 500 hitting 4,500 per Goldman's estimates. And some on Wall Street believe that downside scenario is the most likely outcome. That group is wary of recent bumpy inflation readings and how those could shift the expectation for Fed interest rate cuts later this year. We believe that there is a risk of the narrative turning back from Goldilocks towards something like 1970s stagflation, with significant implications for asset allocation. J.P. Morgan chief market strategist Marko Kolanovic wrote in a note to clients on February 21st. He's maintained a call for the S&P 500 to fall to 4,200 by the end of the year. ChatGPT. The recent surge in stock performance during the first quarter has sparked debates among strategists about the future direction of the market. Some believe that the market rally may continue, driven by optimism about the U.S. economy's resilience and a potential soft landing scenario for inflation. Others, however, caution that the market may be due for a pullback after such a strong performance. Scott Cronert, a Citi U.S. equity strategist, suggests that the market may enter a digestive period to allow fundamentals to catch up with recent gains. His team holds a target of 5,100 for the S&P 500, but hasn't adjusted it upward yet, awaiting more evidence of sustained economic growth and better-than-expected earnings. Similarly, Goldman Sachs' equity strategy team maintains a year-end target of 5,200 for the S&P 500. However, they have explored downside scenarios where overly optimistic earnings expectations, particularly in large-cap tech, or a more aggressive Federal Reserve stance on inflation could lead to a decline in the index to 4,500. Some on Wall Street, such as J.P. Morgan's chief market strategist Marko Kolanovic, are more pessimistic, citing concerns about inflation and the potential for a shift away from a Goldilocks scenario towards stagflation reminiscent of the 1970s. Kolanovic maintains a year-end target for the S&P 500 at 4,200. In summary, while some analysts remain optimistic about the market's outlook, others are cautious and foresee potential risks ahead, particularly regarding inflation and its impact on interest rates and economic growth.